Ladies and gentlemen, good day and welcome to KEC International Limited Q1 FY26 Result Conference Call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this call is being recorded. From the management side, we have with us Mr. Vimal Kejriwal, Managing Director and CEO, and Mr. Rajiv Agarwal, CFO. With this, I now hand the conference over to Mr. Vimal Kejriwal. Thank you, and over to you, sir.
Thank you, Samya. Good morning to everyone, and we welcome you to the Q1 earnings call of KEC. Let me begin by sharing an overview of our performance this quarter, followed by our usual business-wise update. We have achieved a strong top-line growth with revenues of Rs 5,023 crores in Q1 FY26, reflecting an 11% increase YOY, primarily driven by a robust execution in our T&D business, both in India and international. Aligned with our strategic focus, the T&D segment's contribution to overall revenues increased to 63%, up from 55% in the same quarter last year. Our EBITDA for the quarter has grown by 19% year-on-year, with margins improving by 50 basis points to 7%. During the quarter, we have successfully reduced our interest expenses by 40 basis points as a percentage of revenue, now standing at 3% for the quarter. We have significantly enhanced our bottom line with PBT and PAT growth of 41% and 42% respectively. PBT margins have increased by 70 basis points to 3.2%, vis-a-vis 2.5% last year. Our PAT stands at 125 crores. The growth in PBT and PAT continues to outpace EBITDA growth, driven by reductions in interest, depreciation, and tax rates. On the order front, we secured new orders of over Rs 5,500 crores, led by our T&D and civil businesses. Additionally, we have an L1 position of over Rs 6,000 crores, predominantly in the T&D business, which are expected, at least a part of them are expected to be awarded in the next few weeks. We have a well-diversified and strong order book of Rs 34,409 crores as on date. Including the L1 position, our order book and L1 stands at over Rs 40,000 crores. We continue to maintain a sharp focus on our balance sheet. Our net debt, including acceptances, stand at Rs 5,348 crores as of 30th June 25, a reduction of 250 crores vis-a-vis June 30th, 2024, despite a revenue growth of over 2,000 crores, that is 11% in trailing 12 months. Now, talking about the specific businesses, our T&D business continues to be the key growth driver this quarter, recording revenues of Rs 3,157 crore, reflecting a stellar growth of 26%. This performance is a testament to our strong execution capabilities across geographies. The business continues to deliver healthy double-digit EBITDA margins, maintaining its profitability momentum. On the order intake front, the business secured orders of over Rs 3,200 crores across India, Middle East, and the Americas. These include substantial orders in Saudi Arabia. These wins reaffirm the MENA region's strategic importance as a key growth driver for us. In India, we have secured a repeat order from a private developer. We have also strengthened our presence in the growing HVDC segment by bagging another significant order. Currently, we are executing 4 projects, including a major HVDC converter station project spread across 3 locations, along with 3 HVDC transmission line projects. Our active participation in this space continues, and we are currently or have actually bid for several HVDC opportunities in both domestic and international markets. In SAE, the business achieved revenues of Rs 359 crores, a growth of 4% year-on-year. This growth probably would have been higher but for the strengthening of the Brazilian reais. In Brazil, additionally, we are witnessing a significant traction in hardware orders. We have also enhanced our operational capabilities with the installation of new equipment at our Brazil facility, which will boost hardware production capacity and improve efficiency. In Mexico, the business has secured a major tower supply order, reflecting a positive momentum in the North American T&D market. Overall, the business continues to benefit from a steady, profitable order inflow with a robust order book and L1 position of over rupees 2,300 crores. With a robust order book and a sustained increase in tendering activities in the T&D segment, we embarked on a bottlenecking and capacity expansion initiative for our tower manufacturing plants with minimal investment. Following the successful capacity enhancements at our plants in Dubai, Jaipur, and Jabalpur, we have now commenced expansion at our Butibori plant facility in Nagpur. This positions us well to meet the increasing demand for transmission infrastructure in both domestic and the international markets. The overall tender pipeline in T&D continues to be strong in both domestic and international markets. In India, the investment continues to be directed towards grid modernization, transmission infrastructure for renewable energy zones, and inter-regional connectivity, creating a surge in the tendering activity. We are well aligned with this national agenda and see significant opportunities unfolding in the near to medium term. On the international front, the market outlook remains highly encouraging. We are witnessing sustained momentum in the Middle East, where large-scale transmission programs, particularly in Saudi and UAE, are driving demand. Additionally, we are actively pursuing opportunities across Americas, Africa, CIS, and the Far East, all of which are investing in expanding and upgrading their transmission infrastructure to support economic growth and energy access. With a healthy order book and L1 in T&D of rupees 26,000 crores, we are confident of delivering significant growth in this business. In civil, we delivered revenues of rupees 940 crores for the quarter. While execution has progressed across multiple sites, growth was impacted by two key factors: continued labor shortages and delayed payments in the water segment. Although collections have started to improve in this segment, they remain below expectations, and we are maintaining a calibrated approach to execution in this area, considering our exposure. In a proud moment, we successfully handed over our first airport project in Tuticorin, which was inaugurated by the Honorable Prime Minister just a couple of days back. The business continues to strengthen its order book with multiple orders of rupees 2,100 crores in the buildings and factories vertical from reputed clients. In a major strategic milestone, we made our entry into the semiconductor EPC segment, winning a large first-of-its-kind order from a reputed client. We also strengthened our footprint in the metals and mining segment with a repeat order for an upstream project for a steel plant. Notably, we secured two landmark orders in the buildings and factories vertical. The first is our largest ever order in terms of value, while the second is to build our tallest structure we have undertaken till date. This marks our entry into the premium high-rise residential segment, featuring towers rising up to ground plus 70 stories. Today, we are executing over 70 high-rise towers for marquee clients across India. Our geographic footprint extends with a strong presence in key real estate hubs such as Mumbai, Pune, Bengaluru, Hyderabad, Kolkata, and Gurugram. With a gradual improvement in the labor situation, steady collections from water projects, and a robust order book of over rupees 10,000 crores, we are confident that civil business will see good growth in the coming quarters. Our transportation business has achieved a revenue of rupees 471 crores for the quarter. The business continues to focus on execution of new orders and completion of the ongoing projects. The quarter marks several milestones, achievements inaugurated by the Honorable Prime Minister, with KEC playing a pivotal role in their successful execution. KEC played a key role by deploying advanced signaling and telecom systems for the world's highest Chenab rail bridge in Jammu and Kashmir, part of the Udhampur-Srinagar-Baramulla rail link. KEC executed 102 kilometers of railway doubling works between Vanchi, Maniachi, and Nagarcoil in Tamil Nadu, including bridges, electrification, signaling, and civil works. The electrified Sabarmati Botad and Rajkot Verawal rail section in Gujarat were also inaugurated by the PM, both of which were successfully delivered by KEC. These projects are critical enablers for the rollout of Vande Bharat Express services in this region. We are currently executing orders for deployment of Kavach across 500 track kilometers in partnership with our JV partner. This advanced train protection system will significantly enhance the safety, reliability, and speed of railway operations. We expect to secure some additional orders in this segment shortly. We are actively pursuing international opportunities and have also submitted bids for multiple tenders in the Middle East. With an order book of over rupees 3,000 crores, our strategic priorities remain clear: fast-track completion of existing projects, optimize working capital, and selectively bid for high-quality opportunities in both domestic and international markets. Our cable business has achieved revenues of rupees 383 crores, growth of 5% year-on-year. Following the commissioning of the aluminum conductor plant at our Vadodara facility, we have now initiated the doubling of this capacity, which will significantly enhance our ability to meet the growing market demand. In parallel, our capital investment for E-beam and elastomeric cables is progressing as planned, and we expect commercial production to commence by the end of this financial year. Our renewable business has grown by 87%, achieving revenues of 136 crores. We are currently executing two large solar projects in Karnataka and Rajasthan. The 500 megawatt solar project in Karnataka has been partly commissioned and is scheduled for completion next quarter. Additionally, work is progressing well on the 500 megawatt solar project in Rajasthan, Badla, with the first phase slated for completion within this quarter. We continue to bid for select opportunities in solar, wind, and the battery energy storage system. The oil and gas pipeline business has secured its second international order for terminal station works in Africa, in addition to its ongoing pipeline project in that region. The business is focusing on the international market, considering the low tender pipeline and extremely competitive scenario in India. On the ESG front, we continue to integrate best-in-class sustainability practices across our factories and project sites. As part of our strategy to make all our manufacturing plants water positive, we are pleased to announce that our Jaipur plant recently received the water positive certificate. With this achievement, 4 of our manufacturing plants, Jaipur, Butibori, Jabalpur, and Vadodara, are now water positive. In conclusion, with a strong focus on execution, a robust and diversified order book and L1 of over rupees 40,000 crores, and a substantial tender pipeline of over rupees 180,000 crores, particularly in T&D and civil, we are well positioned to deliver sustained profitable growth in the coming quarters. Thank you very much. We are now open to take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Parishik from HDFC Securities. Please go ahead.
Yes, sir. Hi. Congratulations on a decent quarter. My first question is on standalone margins. So after 3 quarters of improvement in EBITDA margins in 2Q, 3Q, and 4Q FY25, we have again seen a dip in first 1Q margin to 4.9%. So any particular reason, any one-offs during this quarter in standalone? So if you can give some more color on this margin trajectory.
So Parikshit, I think that the reason for that is very clear. One is our international business, which is housed in UAE and all that is doing very well. Secondly, during the quarter, our civil margins, you saw degrowth in the civil revenue. So because of which on the leverage impact, we had a much lower margins in civil. And I think cable also, because of, we commissioned the plant and, we did not get certain approvals from customers, which are now coming through. We had some stock, etc. with us. So there was an increase in the interest cost. And I think that has led to this. But I think we are very clear going forward and the way we are planning budgeting, etc. We do not see any issue with the standalone margins. I think overall, we expect that our standalone margins for the year should be at least at 70 to 75% of our overall targeted PBT for the consolidated entity.
But more on a longer term, sir, as we are talking about consolidated margins improvements on a standalone basis, how do we see the margins? Any guidance there for FY26-27 on trajectory side? Do you think that we will be in a position to achieve high single-digit margins, starting FY27 and somewhere close to about 7% to 8% in this year?
So for FY26, we have actually guided at 8 to 8.5 already. Okay. So, I think I don't see any major issue, at least in meeting the lower end of it, but 8 to 8.5 is what something we think that is achievable. FY27, obviously, we should have at least a 50 to 100 basis points improvement in that. So FY27, we will be probably inching closer to 10%, then towards 8%.
So I'm talking about standalone margins, sir. Standalone margins guidance.
Standalone, I don't think I'll be able to give you a separate number, but as I said, for the year, we are talking about our standalone margin to be between 75 to 80% of our consolidated margins, overall margins. Okay? So I don't think the number will be very different. In fact, to me, the standalone margin should increase because if you look at the India T&D business, we grew by almost 50% this year. We have an order book, so that will grow. Civil is growing. So what will also happen is that the ratio between the India and international will also be more skewed towards India, which will help us on the standalone margins.
Okay. Got it. My second question is on the bid pipeline, especially on the T&D side, so both on the domestic side and on the international. So what would be the bids you would have submitted but still not opened in India and abroad? And how is the tender pipeline looking on the T&D side, specifically for both domestic and international?
I don't have the exact number of what we have submitted, not opened, but I think the tenders which are either bid or which we should be bidding, let's say, in the next 1 or 2 months, is around 90,000 crores. Okay, 30,000 in India and 60,000 in the international market. Those are the numbers for the bids which we expect that, in the next 2 or 3 months should get bid and decided.
So on the building side, sir, now, I have recently seen one of the dairy launches, which has been sold out. So I understand KEC is doing that, so which is also a very premium project for entire Mumbai. So just wanted to understand on the premiumization side of the building EPC. So, so how has been the journey over the last few quarters, and now do you think that you're in a position where you can bid across all, segments like mid luxury, ultra premium? And do you think that this will trajectory-wise improve your margins to double digit in the building segment? And also, out of the total civil, how much is the building now?
55%. Yeah. So I think the B&F is roughly around 5,000 crores out of our order book of 10,000 crore for civil, so roughly 50%. Okay. And I think what is happening, Parikshit, is that we are focusing on increasing the ticket size of the orders. So in fact, most of the orders which we have won during the current quarter, most of them are above 500 crores in terms of size. Clearly, I think premiumization is on the card. We have also reduced increased the minimum size of orders which we are taking in civil. I think around 300-400 crores is what we are not taking below those numbers. So you'll start seeing a lot more larger orders coming out. This will help us in also fast-tracking execution, because we'll be working at a lesser number of sites. Today we had 310 projects overall. We are reducing it to 75. We'll probably reduce it to 250 in terms of number of sites at which we are operating. I think that's the way we want to work on it.
Okay. Sure, sir. Thank you. Those are my questions.
Thank you. The next question comes from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yes, sir. Good morning, and thanks for the opportunity. My first question is, you alluded to a very strong tender pipeline in domestic T&D, but I think the first half, Q1 was too slow. How do you see the tender finalization in the rest of the year? And if the 30,000 crore we spoke about the tender prospect, do you think that number will inch up as we go further in the fiscal?
So, Mohit, your question was not very clear to me, but I think what you are looking or asking is that tender or award pipeline was slower in Q1 in India. I think that's a fact. Okay. For whatever reason, we did see a slowdown in awards happening. I think a couple of things are happening. One is we are seeing a lot more private sector being more successful in TBCB. Okay. And what we are seeing is that, unlike Power Grid, where they are tied up with a particular EPC before the bid, so for them, awarding becomes very easy. For private sector, they start all the processes after bidding. So typically, we have seen that a large number of bids which have been won by the private sector are yet to be awarded. And right now, I think we are very close in discussion. So you'll probably see a lot more awards happening, whether to us or to anyone else in this quarter on the India T&D sector. Also, I think there was a lot of pressure on the transmission grid and there were some solar plants and other renewable plants which have been delayed. So I think there was probably some rethink happening on which lines to prioritize and which not. So I think that has now got cleared. So we are now seeing a lot of bidding happening at the developer level for the TBCB projects. And I think we will start seeing a lot more awards in this quarter as well as in the next quarter.
And sir, when you say L1, that excludes TBCB, right? It will include only power grid. Am I right in saying that?
So when I say L1, I am L1 with the developer. Okay.
Understood, sir. And so how do you think about the Middle East T&D opportunity in FY26 compared to, let's say, FY25? And the related question is, how is the competitive intensity in the Middle East in particular? Yeah.
So the tender pipeline remains where it is. I think we have been talking about 50,000 to 60,000 crores in every conference call, and I think it has been continuing in that manner despite the awards are happening. So it's a pipeline which keeps on rolling over. You get new tenders coming in. As far as competitive intensity is concerned, I think we are seeing some increase in the intensity in the UAE side. Saudi side, which is our main market, and our L1s today of 6,000 has a large portion of Saudi L1s in that, has not seen any significant. In fact, I'll say it has seen a reduction in the competitive intensity in the Saudi market. In fact, recently where we have been L1 in one of the projects which is in 6,000, we just saw 3 or 4 bidders. Earlier we used to see 7 or 8. So slowly, because the business has become, I'll say so large, and people are winning, and I think they are more satisfied with what they have. The competitive intensity in Saudi, and if you did not ask me, but also in India has become significantly less for the large value orders.
Understood. So my last question, is it possible to share the KEC Asian Cables EBITDA and PAT?
I don't think we are giving it in this fashion, but if you need to have more data, why don't you speak to Abhishek and he'll give it to you.
Sure, I'll take it offline. So thank you and all.
Thank you. Thanks.
Thank you. The next question comes from the line of Ravi Swaminathan from Avendus Spark. Please go ahead.
Hi, sir. Congrats on a good set of numbers.
Hi, Ravi.
Sir, my first question is with respect to the India domestic power T&D market. We are seeing steady growth in PGCIL and even the private players are awarding. What about states, sir? Are we seeing traction increasingly from state side? Can that become a very sizable opportunity going forward?
So Ravi, you are right. We are seeing a lot of traction happening. But I think what has happened, Ravi, is that somewhere, I think a year or two back, I don't remember, when the Minister of Power had issued a guideline saying that all projects above 200 crores should be on TBCB, even in the states. Okay. Because of which many of the projects have been sort of stuck because states don't want to let it go and ministries are not approving them, saying you need to go through TBCB. In fact, if you look at the latest list of TBCB projects, especially in Maharashtra, I think Maharashtra has accepted that, and we are seeing a large number of projects coming up in Maharashtra on TBCB. There are other states which are slowly falling in line, not yet fully reconciled, which is the reason why we have seen a slowdown in some of the state demands. But it's a matter of time. Either they come under TBCB or then they convince the Ministry of Power that, like I just saw recently a big tender from Gujarat, where they were able to convince the government saying that, TBCB will delay my project and I need to do it fast track, and they went ahead and got an approval. So I think we will definitely see a lot more state projects coming up. Because with the way the interstate grid is expanding, ultimately the power will have to flow down further. So I don't think we have any doubt about it. It's only because of this confusion between TBCB and non-TBCB that we have seen large projects, getting sort of on hold. But that's getting resolved now.
Understood. And can they be as large as, say, PGCIL kind of ordering, say, all states combined put together per annum, say, 2-3 years down the line? Size of the market.
So at a point of time when TBCB was not there, Power Grid and state was almost equal. Both of them used to go around 40,000, 45,000 crores each. Okay. See, the issue, what you have to understand is that what would be the credit worthiness of each of these states, and also since it will be on TBCB, who will win them? Now, recently there was a TBCB award in Maharashtra, but the TBCB is still done by PFC and REC. Okay.
Mm-hmm.
So what happens is for us, the credit risk shifts from the state to the private developer.
Mm-hmm.
And we are seeing a lot more localized developers coming into state. So I think we'll have to wait and watch how that market evolves. Okay. Like Power Grid is also bidding for all of them.
Mm-hmm.
So we'll have to wait and watch how this evolves, which players will play in the developer market, whether Power Grid is as aggressive or not. And in fact, you will be surprised in one or two state TBC. When I call it state TBC, the line is for intrastate. Okay, we have seen the state grid participating as a developer. So we'll have to wait and watch how this entire scene evolves. Yeah.
Understood, sir. And my second question is with respect to the Middle East piece. We are seeing very good traction in the power T&D side, but Middle East is also investing into renewables and BESS very significantly. Our revenues from renewables as of now, that is solar, EPC, etc., is relatively small, like 4-5% of top line. Can this become a very large piece, like say significant size equivalent to that of power T&D kind of revenue over a 3-4 year period?
I don't think we are looking at that sort of growth in this business at the moment. I think we've been talking about reaching 3,000 to 4,000 crores in next 2 years. Okay. And right now our focus is more in India because there is so much and more work right now happening in India. I think, if I'm not wrong, we have now quoted almost 19 to 20 projects in NTPC right now, which are which have already been bid. So I think what is the other piece which is there, Ravi, is that in the Middle East market, the project sizes are very large. They also typically include the module supply, which increases the risk on the margin significantly either way. And we are right now not keen to take any module supply risk because of the volatility. So I think we are happy with what we are doing in India. The growth which will happen in India is apart from solar, we have started quoting for wind also. So you will start seeing some improvement in that area. And BESS is something new for us. I think we have quoted 1 or 2 small projects. We are now looking at it. We'll see. So maybe you start seeing a change in the way our renewable numbers appear to you. From next year onwards, we definitely see the numbers going up significantly, but not to the tune that they match T&D today. We are not thinking about that today. Maybe next year we may change our thought process.
Understood, sir. And my final question is with respect to profitability. Given the fact that so much amount of ordering is happening both in India and outside India, and many of your peers also would be having their hands full in terms of projects, execution, etc. Is there a possibility of profitability of the power T&D business improving further from here? And also on the non-power T&D business, have the profitability of the water and railway business bottomed out? Are you getting any sense on that?
So we already mentioned it at the start of the speech that we have a double-digit margin in the power T&D. Okay. Whether it can increase further, I don't know. It's too early to comment right now. But yes, the competitive intensity has slowed down, so the margins are okay. But I think what has slightly changed in the power T&D is a large number of TBCB bids have been won by private sector. So which in a way creates a problem because the private sector wants to supply the conductor, they want to do the insulator and all that. So the volume of business which you generate may go down, and so that there may be I'll say a slight impact on the increase in the margin. Okay. But I think a double digit is what we have been looking at, and I think we are happy with that part of it. Coming to non-T&D, we just heard, so I think we will start seeing, I think we have reached the bottom. That is the right statement to make, and I think that's why when you look at our margins, we had a 7% margin this quarter, but we are talking about 8 to 8.5% for the year. So clearly we are seeing an uptick which will happen in the margins in the coming quarters, and would also be driven largely also by the margin changes in civil and cables.
Understood, sir. Thanks a lot, sir.
Thanks, sir.
Thank you. The next question comes from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah, thanks for the opportunity.
So firstly, on the water side, what is our outstanding receivables? And have we received any money in first quarter or in Q2 so far?
So Vaibhav, I think you missed my first part. We have received around 257 crores in the first quarter. We have been receiving money in this quarter also. In fact, yesterday also we got around 10, 12 crores, 50 crores. So 50, this month 50 crores. So we got around 50 crores this month also. So the money is flowing, as I said, not flowing in, but trickling in some parts. One state is flowing in, the other is trickling in. So I think that's the way it is.
Sir, and outstanding receivables?
I think we have an overall AR of around 800 crores. Part of it which is built, part of it is not yet built, because typically the way all these departments work is that they will not let you build till the earlier amounts are paid. So there is some outstanding in terms of billing required to be done. Build, I don't know, Rajiv, build kitna hoga? Sorry, it's no, build will be about 250 crores is the build amount. Okay.
Okay. Okay. So secondly, if you look at the non-T&D part in terms of revenue, so the last 4 or 5 quarters, we have seen some amount of decline. The pace of decline has increased over the last 2, 3 quarters. So when do we see growth coming back in the non-T&D part?
I think our expectation is that from the current quarter, Q2, we should start seeing a change in the trend. Okay, whether it will be very visible this quarter, I am not sure, but it will start changing. But from Q3, Q4 onwards, you will definitely see a significant uptick happening in the non-T&D, whether it is civil, whether it is cables, clearly. One of the reasons for the growth being flat also is that we have actually slowed down our railway business. So railway business, which was 4,000 crores 3 years back, is come down to 2,500 crores. So, that's one significant reason. Secondly, I think oil and gas has been a bit of a disappointment. We have not seen any tenders also coming in and too much of competitiveness. So whatever growth we are projecting there has not happened. But otherwise, I think we are pretty confident that from this quarter onwards, Q2 onwards, we will start seeing a change in the trajectory of the growth of non-T&D.
Okay. So lastly, when we bid for these projects, so across the verticals, what are typically our margin thresholds, say in the T&D space and non-T&D space?
It depends. So to me, it's very, very difficult to give a simple answer, but typically 8 to 10% is what we would like to bid for. Cables would be lower at the PBT level because it's a product business. So, it's a different thing. Plus, it also depends upon the competitive intensity of that region or for that particular. Like I'll tell you, in Saudi, the bidding can happen from 8% to 20% or 25%, depending upon the project and all that. So very difficult to give a number. But there is a minimum threshold below which we will not take a project unless it is really very strategic for us.
And so one clarification on margins. So you said that around 8 to 8.5% for 26, and you're confident of closer to 8% for sure. And for 27, you mentioned that it should be a 75 to 100 bp improvement.
That's what we are looking at, yes.
Okay. Okay. Thank you, sir.
Thanks, Vaibhav.
Thank you. The next question comes from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, so thanks for the opportunity. My first question is on the pipeline which you highlighted, 180,000 crore. If you could give us some sense how much is from T&D and civil segment-wise and between international and domestic also. And second thing, I would like to understand how much we are building for. You have said STATCOM has been, we got first order and pipeline is robust. Any color on STATCOM, HVDC, non-HVDC, if possible for you? Yeah.
So as far as the pipeline is concerned, I had mentioned that the pipeline is around 180,000 crores. Okay. Of which around 90,000 and odd is in the T&D sector, of which 30,000 is in India. So balance 60,000 is outside India. Civil is around 50,000 crores plus. Okay. What was the next question?
HVDC, non-HVDC, STATCOM, any color on what we are building in?
So HVDC also, I did make some statement saying that we are right now doing 4 projects. One of which is a converter station and balance 3 are lines. We have bid for some and we are bidding for some more HVDC line. So I think you will definitely see some order wins happening in the HVDC segment, both in the line as well as on the converter station side, where we have a limited role, but it could be a large tender. As far as STATCOM is concerned, I think the tenders are slowly coming in. I think this quarter we will see some more tenders coming out. Not sure whether we will get the award this quarter, but I think Q3 we will definitely see some more awards coming in the STATCOM. I think with the renewable energy getting pumped in a lot more, the STATCOM is becoming absolutely essential. So I think Q3 onwards, you will see a lot more orders coming on the STATCOM. A lot more orders being decided, and hopefully we'll get some of them.
Yeah. Secondly, on civil, you said we faced labor shortage and we saw the revenue decline and also delays in payments. And we're talking about very strong pipelines. What sort of growth we're building? And second, is this the segment which is impacting working capital? Also, we saw working capital was 128 days. So some color on how the civil will pan out with respect to growth, and is it a drag on working capital? What kind of working capital numbers we are working around for the remaining 9 months?
So I think there are various questions which you're asking. So one is, as far as if you look at the payment delays, they have generally happened only in water. And we are not seeing many major payment delays happening otherwise, especially on the residential and the industrial sector, where we don't see too much of payment delays. Okay. As far as margins and other working capital drag is concerned, what had happened was that we had 4 large viaduct orders, 2 in Delhi Metro, 2 in Chennai Metro. Out of that 4, 3 have been fully handed over to the client, and commissioning is going on. I think there's at least in one line they're waiting for the Prime Minister to come and inaugurate. Others also should happen any point of time. So most of these orders have been significantly back-ended in terms of cash flows. Now that these projects are completed, we will definitely see a positive cash flow happening from these 3 large viaduct orders. Each of them are, I think, 1,000 crores and odd, whatever number, I think it's 3,000 crores. So the working capital which is currently impacted, yes, partly is also because of civil, partly because of water, and partly because of the back-ending of the viaduct, which is getting resolved. Civil, what I already told you that we got 250 crores, another 50 crores this month already. So which is why we have been very comfortable in saying that the net working capital, which is today 128 days, will probably come down to 110 days, is what we are still committing. And I think the other reason why there was a slight increase in the working capital is also because of the inventory buildup. One is, I think, with the benevolent steel prices, we did invest a little bit more on the steel than what we should have in the normal course if the prices were not as low as they are. And secondly, as I mentioned earlier, there were some delays in getting our aluminum conductor approval from a major customer, because of which we had some buildup of finished goods inventory in cables, which is now getting liquidated. So we are very confident that the working capital cycle will improve significantly now onwards.
Sure, sir. So lastly, on the Kavach you highlighted, I think we are already doing 500 track kilometer order we got with one of the partner. Just wanted to understand what is the pipeline. Is there any pipeline for this year? If you could quantify for Kavach, that's my last question.
I think, Amit, Kavach is not going at the pace at which we wanted to grow or the government wants it to grow. I think the basic reason for that is, I'll say, still a supply chain issue because most of the players who are there in this field, when I say not the people who are qualified, but the people who are supplying to them, a lot of them are small electronic manufacturing guys, and so I think we are still seeing a little bit stress on the supply chain part of it, and Kavach, as you know, 70-80% or even more is on supplies. So that is the reason why Kavach ordering has been a little bit slow than what it should have been. Okay, we do expect that it will start picking up. There are some tenders I think we are L1 or we should be. Some part of it is included in my L1 list. And there are other tenders also which are being quoted, but it's not something which is happening honestly in a very, very big way. Okay, till the issue gets resolved on the supply chain side, I think we'll see a steady growth, not a very fast growth.
Sure, sir. Thank you so much.
Thanks,
And all the
Amit.
best.
Thank you.
Thank you. The next question comes from the line of Subramaniam Yadav from SBI Life Insurance. Please go ahead.
Thank you, sir. Okay, so just wanted some guidance on the debt level for the full year, because we have seen this quarter about increase of debt about 800 crore. So how does this debt pan out during the year?
Yeah, Rajiv, you want to take this?
Sure. So basically, what we are expecting that this quarter also, you would have seen that we have reduced our debt levels by about 250 crore YOY. And we expect some more reduction to happen, especially in H2, where normally H1, your debt level generally goes up, compared to the March level. But overall, for the year as a whole, we have earlier guided for, about 110 days of NWC, and debt will translate to something around 4,500 crore of debt level by the year end, despite the 15% growth on the top line. So we do expect that we will be able to maintain our numbers at about 4,500 crore debt by the end of the year.
And so this will happen by reduction of inventory and or improvement in the receivables. If you can give some color on both of these things would be helpful.
So there are multiple actually, handles which are available. Some bit of a payment is also, let's say, due from Afghanistan. So we expect that payment to get realized in Q3. Vimal also mentioned in the earlier question that, we are expecting some payment release from 3 metro project that has been handed over to the client and where the, collection was back-ended. So that money will also come. Plus, there are some reduction in the inventory obviously will happen as we have already started getting approval from the customer. So the conductor stocking that we did, so that will also, go in Q2 and Q3. Apart from that, as Vimal also guided that we have done some stocking of steel because of the benevolent steel prices. So hopefully that will also get consumed in Q2 and Q3. So all of these efforts will actually reduce to the lower debt level and lower NWC level.
Okay, thank you, sir. And one more question, sir. When we say the non-T&D mix of the revenue would increase going ahead, but when we were looking at this thing, we were expecting the T&D portion mix to increase, hence our margin would improve. But when the non-T&D mix would increase, then is it a risk to our margin, what we are guiding there?
I don't think we mentioned in that format. What we had said that, when there was a question on the standalone business, etc., saying what will happen to the standalone revenues and margins. So that's where we had said that, the civil and other businesses and cables are essentially more India-centric. And we expect them to increase, so the standalone margins will increase. In fact, we mentioned that our T&D revenues have gone up from 55% to 63%. If I made a comment, it's my mistake. I don't think we made a comment that the T&D revenue percentage will go down today because the growth is right now happening on T&D. Okay?
Okay, understood.
Yeah.
Okay. Thank you.
Thanks, Subramaniam. Thank you.
Thank you. The next question comes from the line of Uttam Kumar from Axis Securities. Please go ahead.
Yes, sir. Good morning. Thanks for the opportunity and congratulations on good set of numbers. Sir, in the presentation you have mentioned about the battery energy storage services. So what kind of opportunities we are seeing in this particular segment, and how we will operate in this particular segment as a EPC contractor or in some other form? If you can throw some light on that.
I think we are very clear on one thing, Uttam, is that we'll only be an EPC contractor. Okay? So I think we are not there right now, or I don't think in the near future we want to get into ownership or development or whatever like that. I think we are just stepping into it. Too early to give any numbers or comments and all that. But since we are doing solar and we started bidding for wind, and now that there's a hybrid model where every developer wants to have, or minimum 5% has to be on the battery storage. So we are, I think, let me put it that we are just getting into that market, and we just baby steps, etc. There are inquiries, and we have quoted for some projects where the BESS is required as part of the renewable projects, solar, etc. So that's where we are there. Also, I think there are some smaller inquiries coming in from the Middle East, etc., where we are already there from the same client. So we are looking at that. Little bit too early. Do you think we'll get a best order this year? I'm not sure. Maybe not. But it's something where we are just getting into it.
Okay. And sir, my next question on labor. So how is the labor issue currently compared to last quarter? It has reduced or it is on the same line or what was in last quarter?
So we had a shortfall of around 30-35% till, I'll say, June. Of that, right now, I think the shortfall has come down to around 10%. So almost 20% of that we have been able to manage in the civil side. We still see some shortfall on the transmission side on the erection gangs because of the large volume of work which we are seeing, and most of the lines are 765 where the towers are very large. We need much more specialized gangs. So I think that's one area where I think all of us are struggling on the transmission side. But civil, I think we are, reasonably, I'll say, comfortable.
Okay, sir. That's all from my side and all the best to you.
Thank you. Thank you, Uttam.
Thank you. Before we proceed to the next participants, I request all the participants to limit their questions to 2 questions per participant. Thank you. The next question comes from the line of Abhijit Singh from Systematics Group. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
You may want to speak a bit louder.
Oh.
Hello.
Yeah, go ahead.
Sir, first question is on the non-T&D business. And a number of participants have alluded to some sort of revenue weakness in the last few quarters, and or let's say more than few quarters, particularly impacted by railways and the water business. And if we look at the overall business, somewhere non-T&D is kind of shadowing the good performance of the T&D business, right? In an environment where T&D is growing super normally, the entire sector, overall performance is somehow shadowed by the non-T&D. So what are the key learnings that we have in the last 2 to 3 years that going forward, when we scale up our order inflow and order book for non-T&D in water, real estate, and other businesses, so what are the key learnings that we have which might prevent us or will help us essentially in better execution going forward?
I think, Abhijit, one thing what you need to understand is that we are a diversified company. We have diversified into all, like I was not there in civil 6 years back. Okay. Just for an example, renewables also. We diversified into all this to sort of de-risk the company. Similarly, we diversified geographically because of that. Now, if you are covering us for a long time, you'll see 3 years back, India T&D actually had a loss. Today, we are talking about more than a double-digit margin. So I think when you are in EPC business, these things will keep on happening and you'll never be very sure in 2 years which of your engines will fire and what will happen. I think that's what is happening. Today, unfortunately, railways, for whatever reason, had a problem. So that's why it is there. So I don't think we are looking at it from a very short-term view. We need to diversify our risks and, both business line-wise, business segment-wise. That's why in civil you see 7 or 8 segments. Cables, you see, all sorts of products, whether it's LT or HV or EHV or conductor. So that's going to happen. Same thing is happening in geographically. We have entered into so many new countries where you're not there. So I think we'll have to look at it from an overall angle. And as I mentioned earlier, we are clearly expecting that the non-T&D growth has sort of, the decline has bottomed out and we'll start seeing increase in the growth and the margins of the entire non-T&D business.
Sure, sir. The second question, sir, would be on the labor issue that we talked about. You said that it was 30 to 35% shortage versus now improved to 10%. So, sir, what is the kind of benchmark that we are saying that now it is only 10% versus more earlier? How do we arrive at this number? And And can we quantify this labor shortage in terms of our execution pace reduction that is happening because of labor shortage?
The
Can you quantify that?
quantification on the labor numbers are very clear because you know each project requires how many people at whatever
Right.
stage they are. So you look at that number saying this particular project requires 800 people and I've got 700 there. So that's why, because availability of front, this is availability of front. This much work I can do. This many people I require for that work. I don't have that people. So that's how you quantify saying, okay, I was 30% short and now I'm 10% short and all that. Okay.
Got it.
As far as quantification of revenue is concerned, very difficult to say, but I don't think we had anticipated there will be a degrowth in civil. Okay. So now the fact that we had a degrowth in civil, one is labor, one is on account of water. But if you look at the numbers, maybe 300 crores, maybe 500 crores, but very difficult. I don't have that number. But since we had a degrowth in civil, I'm just looking at that degrowth and saying, okay, it degrew by some 10% or something, 900. So, so it's a bit difficult to say numbers to it. Yes.
Sure, sir. So that will be it. Thank you for answering the questions.
Thanks, Abhijit. Thank you.
Thank you. The next question comes from the line of Prathamesh Rani from Elara Securities. Please go ahead.
Hello. Congratulations on the decent quarter. My first question, was on the revenue growth guidance. Are you maintaining that and on the order inflow guidance which you had given previous quarter?
100%. Yes.
Sure. Thank you.
Thank you. The next question comes from the line of Ishan Verma from Increase. Please go ahead.
Hi, sir. I wanted to understand that we are targeting a huge growth in the solar, strong growth in the solar and renewable segment, right?
Ishan, we can't understand. So either you have to take on the handset.
I request to use handsets.
Is it better now, sir?
Slightly better. Yeah, go ahead.
Yeah, so I wanted to understand that we are targeting a strong growth in renewable segment, right? But we don't see any order intake in this quarter in that segment. So just wanted to understand what might be the reasons for that. Are the projects return lucrative or not, or is the bidding momentum not there?
No particular reason for that. I think a lot of tenders got bunched up in the last 1 month. I think June and July we have bid for a large number of tenders. I think most of the clients are PSU, so I think they all take their own time to start. March, April and all we have generally seen are slightly low on bidding. Also, we were quite busy with the execution of 2 of our large projects. And in interim, we also wanted to build a better team, a bigger team. So I think those are the reasons. Otherwise, there's no particular reason why orders have not happened. We are quite happy with the orders which we have and the tender pipeline where we have bid for a large number of tender orders.
Okay. And secondly, sir, this tower capacity expansion in Butibori, what kind of expansion are we doing? Is it 10,000, 20,000 MTP?
I don't have the exact number. It will be around 10,000. 10 to 12,000 tons is what we are looking at expanding Butibori.
Okay. And secondly, sir, can you elaborate something on the execution in the international market, particularly in SAE towers, wherein we see that in last year also from Q2 to Q4 we see a degrowth. So what kind of growth are we expecting in this quarter's execution front?
So, Ishan, SAE towers is a product supply business we have. So right now it's virtually operating at full capacity. So the growth in that business will only happen beyond the inflation and the currency and all that if we keep on expanding capacity. Right now, with all the uncertainty on tariffs, etc., what is happening, we are not expanding the main business, the tower supply. I already mentioned that we expanded our hardware. So whatever growth is coming right now is coming more from the hardware. Also, this quarter, the growth was appearing a little bit lower because the local currency strengthened a lot. So which resulted in a lower growth in terms of US dollars and INR.
Okay, sure, sir. Thank you.
Thanks, Ishan. Thank you.
Thank you. The next question comes from the line of Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Hi, am I audible?
Yes,
Yeah,
sir, you're
Garvit, go
audible.
ahead.
Good morning, sir, and congrats for a decent set of numbers. Sir, I have a question on the T&D part only. There are a few problems going on, like tendering delays happening due to transmission connectivity backlog, especially in the states of Rajasthan and Gujarat. And secondly, on this ISTS waiver expiry awaiting extension. So how do you view this situation going on right now in the industry?
I think, Garvit, there was some slowdown in the last quarter, and as I mentioned earlier, we have now seen a large number of tenders which are being quoted by the developers. Also, whatever tenders were won by the developers in Q4 last year and Q1 this year are now under, I'll say, final decision. So you will start seeing some orders coming out in this area. I think in the next 2 or 3 weeks, there will be a large order inflow to the EPC companies. I'm not worried about it. I think what you're talking about is ROW issues in the execution of the current projects. I don't think that is impacting the new tenders in this area. What is happening is that there are a lot of people who are revisiting their solar plants or requirement, etc. So which is where there was some, I think, realignment of future projects, which I think has been completed. That's why a lot more tenders have been released now. So I don't think there's anything to worry about the pipeline in the India T&D market. No.
Got it, sir. That's it from my side, sir, and all the best for the future. Thank you.
Thanks, Garvit. Thank you so much.
Thank you. The next question comes from the line of Jainam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity. So my question is on the HVDC orders. Sir, how are we seeing the opportunity for us outside India in HVDC segment, and in which geographies are we seeing those opportunities?
HVDC outside India right now is limited to Saudi as of now. Okay, they are already implementing quite a few HVDC orders, including one which is a very large one is from Saudi to Egypt with an undersea also part of it. Today I think there are 2 very large HVDC lines which are under tendering in Saudi. Apart from that, I don't think I have seen any other HVDC outside of India right now. Anand, anywhere? North America, yeah, they're talking, but I think that there's... Sorry, I should have corrected. North America, there are some HVDC talks happening. Also, they are now talking about 765 kV in North America also. So our job is only supplies. Yeah, Jainam.
Okay, sir. Okay, sir. That answers my question. Thank you so much.
Thank you so much.
Thank you. The next question comes from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good morning, sir. So my first question regarding renewables revenue grow almost 87%, but this segment is still small, around 136 crore. What is the plan to scale in this segment and given tender competition? That is my first question.
What we mentioned earlier was that we have bid for a large number. We are very positive on this, and I think in the next 2 to 3 years, we are expecting this business to be from 3,000 to 4,000 crores is what we expect it to be.
Okay, sir. So in oil and gas, so you mentioned there is no tendering activities in India. Is there any focus on international market, like which are the geographies we are targeting?
So we already have 2 orders in Africa. We are targeting Middle East. So it's basically going to be between Africa and Middle East where we will see. India, the tenders are very, very little and all very small tenders, 50 crores, 70 crores and all that. So where the competition is not where we can win. So which is why we have almost sort of vacated that market of sub 100 crores. But now we have seen some tenders for the first time which are above 100 crores. Let's see what happens. But I think our focus is going to be international in oil and gas.
Got it, sir. Thank you.
Thank you.
Thank you. The next question comes from the line of Renu Baid from IIFL Capital Services. Please go ahead.
Yeah, hi, good morning, sir, and congratulations for strong numbers. I have only one question, just a follow-up update on there was this bribery case with Power Grid officials, which is under inquiry. So are there any updates on the outcome of that inquiry? And internally, as a fallout of that event, what are the kind of risk management or business practices that we have strengthened to avoid similar instances in future?
So, as of now, there is no particular update on that case. The case is sub judice. The hearings have not yet started. Okay. So as and when it will, I think, progress in its normal course. I don't know how many years it will take, but that's the way it should take. As far as the company is concerned, we had very clear risk management policies, so we are re-emphasizing those policies. Actions are being taken wherever required to be taken. I think let's understand that this is a one-off small transaction which has happened. There's some transgression which has happened in the system, and we are taking care of those transgressions to ensure that even at that small level, it doesn't happen again.
Do you think that it could pose a risk of KEC being barred for a certain period of time with power grid projects in India, or it could just be more of a penal penalty in monetary terms?
I honestly have no idea what Power Grid will want to do, what they will not want to do, because I think we have to understand that it's something which has happened post completion of projects and all that. So I think I have no comment to offer right now on what Power Grid will do or will not do. But I think let me put one thing, Renu, is if you look at my order intake and my order book today, and also what I mentioned earlier on the TBCB side, where almost, I think right now, 50% or more orders are now going into non-PGCIL. Okay?
Right.
So even in the unlikely scenario that PGCIL takes something against us or something, I don't think it's going to impact our T&D growth in any manner. We have a large enough order book in India at least for the next 6 to 8 quarters. So are we worried on the growth? No, we are not worried on the growth. We don't like what has happened. We don't like it, and we are taking whatever is required to be done.
Right. Sure, because this has been one of the concerning elements across investors. So I thought of just.
Yeah. No, I appreciate your question, but I think investors should not be worried about it. We have more than enough order book and pipelines, and as I said today, almost 50% of the transmission in TBCB is going to non-power grid today. Okay? So there are enough and more alternate avenues happen with us in case something happens. And you would have heard that we have a 6,000 crore L1 pipeline today. And I'll say almost 80% of that is in the international T&D market. So I think international T&D market is looking very well. So in the unlikely event that your domestic goes down for something, we always have our diversification part of it in international market. So my only comment would be that we should not worry about it.
Sure. Thank you and best wishes to you. Thank you.
Thanks.
Thank you. The next question comes from the line of Manish from Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity. And I have only one question. In terms of our working capital days with respect to T&D business and non-T&D business, do you have any broad breakup of net working capital days, which is 128 days currently? Both the business.
So, clearly the working capital is intensity in the T&D business has been coming down over the last couple of years. Currently, that is less than 90 days in T&D business. And non-T&D businesses, because of the various factors that Vimal also alluded some time back, because of the cash flow being back-ended in metro project, water project, some payment delays happening for last few months. So there has been the intensity is higher, and that is actually not because of the non-T&D businesses working capital intensity being higher. So the overall NWC days stands at about 120 days. And clearly we have various levers which are available on which we are continuously working on, and we expect that this should come down significantly in the coming quarters. And that is the reason we have given the guidance for the interest cost at 2.5%, debt level to come down to about 4,500 crore despite 15% growth that we have been talking about. So we are quite in control of the situation, so nothing to worry on that account.
Sure. Understood. And one small clarification, Vimal, you talked about the competitive intensity is stable in large value orders in India. So can you quantify what is the size of the large value order where the competitive intensity is stable?
Typically, it would be around 500 crores plus.
Okay, sir. Thank you. Thank you, sir.
Thank you. The next question comes from the line of Saket from Kapoor and Company. Please go ahead.
Namaskar, Vimal ji.
Namaskar, Saket ji.
So thank you for this opportunity, sir. Firstly, when you were mentioning about release of fund, some odd crores in the water project, are you alluding to the fund related to the Jal Jeevan scheme in particular, wherein there were some issues with many EPC players?
Yeah, we only do Jal Jeevan as of now. It's all money is in Jal Jeevan only.
Okay, sir. So for Jal Jeevan, what was our receivable for March and what is the current outstanding, sir? Any ballpark number?
साकेत जी कोई मेजर चेंज नहीं हुआ होगा बिकॉज हमने क्या किया जितना पैसा है उतना और काम कर दिया. ओके तो मेरे पास मार्च का फिगर नहीं है बट करीब करीब अभी 800 करोड़ के अभी रिसीवेबल है. आई थिंक मार्च में भी उतने ही रहे होंगे, कोई बड़े नहीं होंगे, मतलब 25-50 करोड़ आगे पीछे होंगे बट नो मेजर चेंजेस.
Okay. So you mentioned about 300 something being released and that was again receivable have been billed again. That is what you are trying to आप बताना
चाहिए. क्योंकि आखिर में प्रोजेक्ट तो करना ही है तो जितने पैसा वो देते हैं उतना हम उसमें वापस री इन्वेस्ट कर देते हैं बिजनेस में.
So there is traction now in the scheme, sir, because other players, 5 players and all are showing 30% volume dip year on year. So आप क्या प्रोजेक्ट में सर अब दोबारा जान देख रहे हैं कि गवर्नमेंट का फोकस परिवर्तित होता दिख रहा है?
देखिए 30% कहाँ से आया मेरे को पता नहीं है क्योंकि आज क्या हो रहा है, पहले पाइप का ऑर्डर देते थे 6 महीने तक पाइप मिलते नहीं थे. अब आप ऑर्डर देंगे तो अगले हफ्ते पाइप दे रहे हैं वो लोग. तो आपको 30% अगर है तो मेरे को समझ में नहीं आया. एक्चुअली मेरे हिसाब से तो कम होने जाना चाहिए था बट है तो अच्छी बात है ना?
जी सर, दिन गेट
नहीं मैंने कहा अच्छी बात है अगर हो रहा है तो ग्रोथ उनका, बट मेरे हिसाब से ग्रोथ नहीं हो रहा है क्योंकि हमारे लिए एज
अ 30% डी ग्रोथ सर, नॉट ग्रोथ सर.
हाँ डी ग्रोथ बोला मेरे को ग्रोथ हो रहा है इसलिए मैंने बोला आप क्या बोल रहे हो.
नहीं जल जीवन में तो नहीं हो रहा है वैसा कुछ. तो सर ओनली पॉइंट आई वाज ट्राइंग टू अंडरस्टैंड is that whether the budgeted amount of say 68-69,000 crore which the government has alluded in the budget वहाँ से disbursement का कार्य शुरू हुआ है कि वो नंबर में ही रह गया है सर? That is what my point was.
बड़ा मुश्किल है जवाब देना आपको क्योंकि देखिए जो पैसा आ रहा है जब हम स्टेट गवर्नमेंट में बात करते हैं बोलते नहीं हम दे रहे हैं, हम जब सेंट्रल में बात करते हैं तो बोलते जो स्टेट दे रहा है उसके बराबर का दे रहे हैं. तो मोस्ट ऑफ द फंडिंग जो है ना इसमें आधा स्टेट सेंट्रल के बीच का है. अब आखिर में जो आ रहा है वो कहाँ से आ रहा है उसका तो एंड सोर्स हमको पता नहीं चलता है. ओके पर दोनों लोग यही बोलते हैं कि हम दे रहे हैं. और देखिए पहली बार बजट में जल जीवन मिशन का नाम सुना, मैंने फिगर सुना उसका, और अभी आई थिंक ईज तो होगा बिकॉज अभी क्या हो कि सरकार के पास मेजर जो बचा नहीं है ना, अपने पावर का कर दिया, अब पानी की बात कर रहे हैं, सोलर का हो गया. सो इट्स अ मैटर ऑफ टाइम कि द फंड्स विल स्टार्ट गेटिंग रिलीज एंड समवन इन द गवर्नमेंट विल स्टार्ट फोकसिंग कि इस धंधे पे हमको काम करना है.
One more small point, sir. In this scheme, sir, the river linking project में भी KEC अपना expertise लगा सकेंगे. When that can come into foray, I think so the Ken Betwa project and all are huge projects going ahead. So we will participate.
साकेत जी ये एक डिबेटेबल सवाल हमारा डिबेट चलता रहता है बिकॉज क्या होता है कि रिवर लिंकिंग में आप देखेंगे तो 8 साल 10 साल के प्रोजेक्ट होते हैं. ओके बीच में एनवायरमेंट का इश्यू होता है, कई बार कोर्ट के स्टे ऑर्डर हो जाते हैं, तो उसको देखेंगे कैसे करना है. प्रोजेक्ट पानी में बहुत आ रहे हैं, रिवर लिंकिंग के आ रहे हैं, आपके इरिगेशन के आ रहे हैं, इरिगेशन कैनाल को पाइप से रिप्लेस करने के आ रहे हैं, लिफ्ट इरिगेशन के आ रहे हैं, पंप स्टोरेज के आ रहे हैं, कई चीजें हो रही है जो पानी से रिलेटेड है. तो सबको देख रहे हैं जो सही लगेगा, स्पेशली प्रोजेक्ट वाइज. आई एम नॉट इवन लुकिंग एट इट सेगमेंट वाइज कि किस सेगमेंट में करना है. इंडिविजुअली कौन सा प्रोजेक्ट ऐसा है जो कर सकते हैं तो उस प्रोजेक्ट को देखेंगे.
Last second question is on the solar EPC, sir. So abhi taking into account the big pipeline and also you I think so alluding to the 3,000 crore की top line हम शायद solar से बनाने की लिए ready हो रहे हैं. तो sir total अभी pipe size कितनी बड़ी हो गई है solar EPC की, and solar cables में I think so some E-beam one we are expanding, उसमें कितना capex कर रहे हैं और क्या turnover expect करते हैं solar cables से?
I think वो capex करीब 90-100 करोड़ के बीच में है मोटा मोटी, और ऑलरेडी हम 500-600 करोड़ तो ऑलरेडी बेच रहे हैं सोलर. तो सोलर केबल तो ठीक चल रहा है. ईपीसी में अभी पता नहीं, हमारे को नंबर तो बहुत ज्यादा आ रहे हैं बट जैसे उसमें क्या मार्जिन अभी भी बहुत ज़्यादा हाई नहीं है, तो उसको धीरे धीरे जब मार्जिन का इंप्रूवमेंट होगा तभी एक्सपांड करेंगे, नहीं तो फिर आप बोलोगे मार्जिन कम हो गई आपकी। तो इसलिए सोलार को हम शांति से कर रहे हैं। जैसे मैंने कहा 3 साल में होगा 3,000 to 4,000 crores ऑफ बिजनेस कमिंग आउट ऑफ रिन्यूएबल, और अगर मार्जिन उसमें इंप्रूवमेंट हो जाता है, आज भी क्या है वहाँ पे लैंड अवेलेबिलिटी वगैरह का बहुत इशू है, तो प्रोजेक्ट डिले हो रहे हैं। तो जब तक वो सारे इश्यूज रिजॉल्व नहीं होते कि जो प्रोजेक्ट हमको 8 महीने के लिए 8 महीने में कर सकते हैं, तब तो क्या मार्जिन इंप्रूव हो जाएगी। तो आई थिंक उसमें कई चीजें हैं, वी आर वेरी बुलिश ऑन इट, बट वी आर वेटिंग एंड वॉचिंग एंड सीइंग कि भाई किस तरीके से हम उसको 4,000 ले जाएं।
सर लास्ट पॉइंट में रेलवे पे एक क्वेश्चन रखना चाहूंगा, फिर मैं लाइन में जाता हूँ कि सर रेलवे कैपेक्स तो जैसे आपने कहा कि रेलवे से हमें थ्रस्ट नहीं मिल रहा है, बट व्हाट वी आर हियरिंग दैट फॉर द जून क्वार्टर रेलवे हैज बीन द बिगेस्ट स्पेंडर फ्रॉम द गवर्नमेंट साइड। तो जो जिस जगह वो स्पेंड करें हम वहाँ प्रेजेंट नहीं है, दैट इज द रीजन। अदरवाइज द कैपेक्स फ्रॉम द रेलवेज हैव गॉन अप ईयर ऑन ईयर बाय 50%। दिस इज व्हाट द बिजनेस डेली आर मेंशनिंग।
मेरे को तो पता नहीं फिगर कहाँ से आ रहे हैं, बट जो हमारे इन्फॉर्मेशन है मेजर खर्चा जो है उनका आ रहा है ना, उनका सब रोलिंग स्टॉक पे जा रहा है। वंदे भारत ट्रेन, वंदे भारत स्लीपर है, वंदे भारत सीटिंग है, आपका स्टेशन रीडेवलपमेंट है। तो जो मेजर जो आज से पैसेंजर एम्यूनिटीज और उस तरफ जो खर्चा है ना, वो उसमें बहुत ज्यादा हो रहा है, ना कि कैपेक्स साइड में। मतलब कैपेक्स इन द सेंस कि आपको लाइन बढ़ानी है, आपको इलेक्ट्रिफिकेशन करना है, सिग्नलिंग वगैरह करना है, उन चीजों के बदले आई थिंक वी आर स्पेंडिंग अ लॉट मोर राइट नाउ ऑन एम्यूनिटीज एक्सेट्रा। तो जब भी हमारे एरिया में आएंगे तब हम भी काम करेंगे उसमें।
जी धन्यवाद विमल जी, एंड ऑल द बेस्ट टीम सर फॉर द रिमेनिंग। थैंक यू सर।
Thank you. Ladies and gentlemen, we'll take this as the last question for today. I would now like to hand the conference over to Mr. Vimal Kejriwal for closing comments.
Thank you so much, and I would like to once again thank all of you who are continuing to show interest in KEC. Thank you.
Thank you. On behalf of KEC International Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.